So today let's talk about mutual funds, because chances are if you have ever thought about investing, someone's thrown that term at you, and just as quickly you've heard a ton of conflicting advice. It's only for the rich, it's way too risky, it's too complicated. So today I'm cutting through the noise. Whether you are just starting out or already knee deep in your portfolio, this is a video you'll not want to miss. We are getting into the truth behind some of the biggest myths. Yes, some of the biggest myths about mutual fund investing. Let's go. You don't compromise when it comes to your access to cash, because you deserve complete protection, not compromises. Follow Enrichwise for most of the things. What exactly is a mutual fund? If we strip it down to basics, at its core, a mutual fund is a collective instrument. People like you and me pool our money, and that pool is then invested by a professional across a diversified basket of assets. What kind of assets? Stocks, bonds, etc. A bit of both. Myth number one. Mutual funds are only for the wealthy. This is a very common myth which you'll often come across. Let's put this myth to rest right away. Mutual funds don't care about the size of your wallet. They care about your willingness to start. You don't need deep pockets. You just need a foothold. Many funds let you begin with amounts smaller than your weekend grocery bill. Yes, you heard it right. The real wealth isn't in starting big. It's in starting early, starting small, and staying consistent. Because money grows. Yes, money grows, but it's discipline that compounds. And even small, consistent contributions, especially when automated through SIPs or systematic investment plans, can turn into something substantial over time. Myth number two. Mutual funds are too risky. Risk gets a bad reputation. Here's what I think. Risk unmanaged is danger. Risk which is understood is opportunity. Mutual funds actually manage risk through something beautiful. What is that? Diversification. You need to know about this. Instead of putting all your eggs in one stock-shaped basket, your investment is spread across sectors, industries, and asset types. It's like walking through a net instead of a tightrope. And the best part, you get to choose your level of risk. So Enrichwise can help you navigate this journey smoothly. Myth number three. Mutual fund means only invest in equity. This one's like judging a library by just one shelf. Yes, equity funds are part of the mix, but mutual funds go much deeper. There are multiple categories. There are actually 5 categories in mutual funds. Debt mutual funds, tax saving funds, gold funds, thematic funds, international funds. Some aim for capital growth, others for steady income. Some just want you to help you save on taxes. Some just want you to beat inflation. You can connect with our team at Enrichwise and we can help you pick the right tool for the job. Myth number 4. Mutual funds lack transparency. This actually is not possible nowadays because mutual fund is a very tightly regulated instrument. Back in the day, that might have had some truth to it. Today, mutual funds are practically open books, very heavily regulated. They are heavily regulated by organizations like SEBI and AMFI. You can track everything from where your money is invested, to the fees you're paying, to the fund's past performance. Monthly fact sheets, portfolio disclosures, management commentaries, it's all out there. It's all out there in the open. Transparency isn't the problem anymore. It's attention that's often missing. And if you give your investments even a little bit of it, you'll find the clarity is already there. Myth number 5. Mutual funds are complex and difficult to understand. But this is one I wish more people would challenge. Because yes, finance can sound intimidating and boring also at times. But that's mostly a language problem, not a logic one. You don't need to decode every acronym or memorize every ratio to begin. Start with a simple instrument like SIP. Pick a fund that matches your comfort zone. Read the basics, or better yet, ask questions. You don't need to know everything. You just need to know enough to get going. And moreover, if you got a good advisor by your side, you just don't have to do anything. Trust your advisor and trust the process, because the truth is, clarity doesn't come before action, it comes because of it. Mutual funds aren't a silver bullet. They won't make you rich overnight, but they are one of the most accessible, flexible and time-tested ways to grow wealth. Slowly, steadily, surely, and with intention. Don't let outdated myths rob you of your future gains. You don't need to have it all figured out. You just need to start small, and soon, because in the end, It's not about chasing wealth, it's about building a relationship with money that works for you, not against you.